Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and today, of course, is May 25th. We are into the second last week for the month of May, and quite a bit of things happened. Although on the economic front, we don't have a lot of economic releases last week, but we do have moments in which market do react quite violently. So today we're going to go through some of them. Okay, and I do understand some of you have not been able to successfully register for this webinar. I will try to provide the feedback back to the sponsor IronFX to let them know that there are some difficulties in you guys trying to register for my weekly event. Okay. Now, with that out of place, I also want to remind you guys that this presentation is not an offer to buy or sell any kind of securities, be it futures, FX, CFDs, or any other margin financial products. And the trading of such products do carry the element of risk. So do understand your own risk profile before you attempt to trade them. And I'll be sharing you my views on the various markets. And do remember those are my views and has got nothing to do with the sponsor INFX. Speaking of which, I want to acknowledge their sponsorship and I appreciate their continued support. And I hope you guys also have the chance to actually experience the services provided by this particular platform. And I will be also telling you that the content of this presentation has not been vetted by any regulatory body. Okay, with that out of the way, let's get started. Now, of course, we have a few Fed members who has been speaking this past week, and they will continue to speak into next week. FOMC minutes. Okay, so we want to know what are their views, and as far as interest rates is concerned, whether there will be any chance in which they will be cutting interest rates or holding interest rates for a time being. Now, this guy, Bolsett, is actually the president of the Atlanta Fed, and he is definitely influential. He is of the view that considering the uncertainty surrounding the tariff policy by President Trump, he feels that it will take at least 6 months for the data to come in to be able to give them a solid ground to actually make a valuation as to the impact of the tariff policy. So definitely based on what he says, he's definitely seeing no change in their monetary policy for the next 6 months. Okay, so the next FOMC will be due in June. Okay, so just be aware that expectation is actually very, very low for the Federal Reserve to do anything in June as well as in July. August, they will take a break. So at the earliest, if there's going to be any kind of movements on the monetary policy front, it will most likely be September. Even that is not certain. Okay. Now, the other members of the Federal Reserve, this one is the St. Louis Federal President, Musalin, okay, he is also warning about the impact of the tariff policy, but he's actually a little bit more pessimistic. He do see significant impact despite the trade agreement, so-called trade deal, okay, that they have with the United States. Presently, like I mentioned in previous updates, there has been to date no official formal agreement being signed. Even the one that the President Trump has been touting that to be a significant agreement between the US and the UK, that did not result in a formal agreement just yet. So we knew there were 90 days in which the President Trump will be waiting for the various nations to approach the United States for an agreement. To date, there is no formal agreement yet from any of the trading partners. So not sure whether there will be any kind of agreement being reached. I think everybody is watching the agreement between the US and China, that being the main event. So the rest of the other nations are just basically wait and see, okay? And from the look of things are not definitely going in the same direction, because just days after striking a 90 days truce between the US and China in terms of tariff, in which they have successfully brought down each side by 115%, in which Chinese export into the US will be levied 30% tariff, whereas US export into China will be levied 10% tariff. This is exactly what it was before the Liberation Day tariff. So not sure whether they will move beyond that, okay? But we already said that just days after this basic agreement has been reached in Geneva between the two sides, the United States actually started the technology war all over again by restricting the use of Huawei's AI chips, even by domestic players. Chips that are manufactured in China, within China by Huawei, now will be in infringement of US regulation because they suspect that Huawei chips may have US technology embedded. So even domestic Chinese players cannot use Huawei AI chips. This is very difficult to enforce, and definitely China is not taking it lying down. So this is definitely not a good start, because just when the world is celebrating a de-escalation between the two trading partners, US has already started another round of the trade war. Okay, this time is based on technology, and this is something that we want to continue to watch. It's definitely not doing well. Okay, so do not have any high hopes. Now, the main key event for this week actually comes from the bond market, and it actually came from the Japanese bond market. Now, in this chart, you can see the 40 years Japanese government bond yield has been on the rise and rise, and it actually spiked all the way into the highest we have ever seen since 2020. Okay, so this is definitely something we want to be concerned with, because all the talks about national debt, we all understand that the Japanese has 230% uh, over their GDP in terms of their debt. And it has come to a point whereby, since they abandoned the negative interest rate policy, and they allow interest rates to rise, now we have seen there has been chaos in the Japanese government bonds, because all the while throughout the QE, which is the quantitative easing, okay, the biggest buyer of Japanese government bonds, so-called the JGBs, has been the Bank of Japan, accounting for 52% of all purchases. At this current point in time, the Bank of Japan is in no capacity to continue to be the backstop. So they are no longer buying the JGBs. And just imagine the biggest buyer of an asset suddenly decided that they are not buying anymore. And this create a sort of a panic in the marketplace. So right now there is the possibility that the government bonds in Japan may actually cradle, which it has, because during this past week auction, they could not find buyers, okay, and they have to pay very, very high yield to be able to sell some of the JGBs. And this is definitely not a good development, because it will have spillover effect into the American bond markets, because the largest holder of American treasuries are the Japanese. So if they're having problem back home, cannot find buyers to buy their government bonds, and that will result in spillover selling into the American treasury market, which it did, okay, which caused the entire yield curve in the US Treasury to surge, very much like what we see in the Japanese bond yield. So this is something that we want to continue to watch, because among the various nations, okay, which very high debt commitment, Japan is way, way up there, okay? And of course, and if the Japanese cannot finance their own debt issues, they may have to consider selling the American bonds to take the money to support their own debt market, which I think the Japanese has been doing and will probably continue to do going forward. So we want to make sure that we stay focused on developments in the Japanese bond market, because the yield right now is threatening to unravel the decades of quantitative easing in which Japan has been under. Okay, so this is something that we definitely want to watch. And somewhere in the middle of the week, we have reports from the United States speculating that Israel is getting ready to strike the Iranian nuclear facilities. This is on the back of a closing up between US and Iran. The last I heard is that they possibly has a tentative agreement, and definitely the Israelis will not be happy, because Iran has very active nuclear research, which can be weaponized. Although the Iranian has been maintaining their stand, saying that their nuclear research are all for peaceful purposes, purely to look for alternative to oil, okay, as a energy source. But the Israelis obviously do not believe, and they are trying to get, or rather, the U.S. and Israel is trying to get the Iranian to surrender their plutonium, okay, and which can be used to build nuclear bombs. So this piece of news, although not verified, actually spooked the market. So that we saw that in the middle of the week, we saw U.S. equity starts to ease off. Okay, but I think the biggest bear hug for this week is actually the American bond market. Now, this is the U.S. Treasury yields. We have the 10 years, the 20 years, and the 30 years. Okay, so this past week, the U.S. Treasury departments tried to auction the 20 years bonds, which received very tepid demand. And this is a result of possibly the negative sentiment spilling over from the Japanese bond market. Okay, so we can see at the end, they managed to sell 20-year notes above 5%. Now, 5% is actually very, very high because we haven't seen such rates since October 2023. Okay, the rate in which they pay jumped all the way above 5.10%, okay, which is very, very high. Now, remember, every 100 basis point, which is 1%, jump in the yield will result in 363, okay, billion in extra interest that the US government will have to cough up. Okay, so we want to continue to watch because there's a very good chance this chart that we see in front of you is suggesting that there will be a chance for the yields to climb to actually challenge the 2023 high, which is 5.5%. So if that's been the case, it will be problematic because we all knew that next month, okay, the US will have, the US Treasury will have to roll over or to refinance something like $6.2 trillion worth of short-term treasuries. So with the yield above 5%, it will be very, very expensive for the US Treasury Department to roll over. And that will result in higher interest payment for the very big debt. And this is not all because we knew this entire year, 2025, total they need to roll over $9.2 trillion worth of treasuries. Okay, so but the one that is immediately under focus will be the one coming up very fast, okay, in June. So we definitely would have to watch. And of course, during this period from now until August, the US Congress would have to either raise the debt ceiling or to suspend it. Okay, obviously, President Trump wants to suspend it altogether. Okay, but it will be a horse trading, okay, between the Republicans and the Democrats, although the Republicans marginally control both chamber of Congress, okay, but it will be a fight. If there is going to be any inkling that they cannot get any kind of agreement going into the debt ceiling, okay, in fact, they need to raise the debt ceiling. If they cannot raise the debt ceiling and then having to refinance a wall of maturing short-term treasury, that will be a lot of pressure. That's one of the reasons why President Trump has been harping on wanting the Federal Reserve to cut interest rate pronto because he cannot afford, okay, to allow the yield to continue to climb. Because the yield, especially the 10-year yields, is a bellwether yardstick because the US mortgage rate is pegged to the 10 years treasury yield. Right now, the US mortgage rate is above 7%. Okay, so it will sour the mood going into the midterm election, okay, which is coming up very, very fast. So definitely President Trump wants to make sure that he doesn't have to face uproar because of higher interest rates. Okay, so this is something again we will have to continue to watch because for one, the yields are climbing, which is a bad sign, okay, as far as inflation is concerned. And we have no inkling as to the impact of the tariff just yet, okay? So that will come in the months ahead. It will not be so fast because the spillover effect will take time to actually filter through the economy, okay? Now, this thing is also very interesting because we're talking about a one big beautiful bill. So-called one big beautiful bill is actually coined by President Trump, in which he is trying to lower taxes for American. Okay, but if the income for the U.S. government, depending on tax collection, is going to be reduced, he needs to also be able to bring in other revenue sources. Right now, tariff doesn't seem to be the answer, so he will have to consider to shrink the size of the U.S. government. And that has not gone very well because Elon Musk was supposed to head Dodge, whereby he's looking to cut, okay, wasteful and fraud within the federal government, has decided that he wants no more of that job. So he has already said that he has already quit that role. He will not be actively involved in it, and he's going back to running his very much better Tesla. Okay, so we can see that of the expectation of cutting $2 trillion off the federal budget, I think he only achieved something like 10%. Okay, so it is definitely way below expectation. So if he cannot cut the size of the government, by extension, the size of the federal budget, and then having to cut taxes, there will likely be a shortfall, and the budget deficit is likely to widen even further. Okay, and that will have catastrophic impact on the national debt. Okay, so this is something we want to again watch, and well, it has passed through the House of Representatives. Now the bill will have to go to the Senate for their approval. Only when the Senate pass the same bill, okay, then it will be ready for the president to sign. Okay. Then somewhere before the market closes for the week, Trump, out of frustration at the progress of negotiation between the EU and the US, decided that he wants to get the ball rolling by tweeting, using his use Truth Social app, okay, by saying that he recommends, okay, he didn't say he insists, he said he recommends a 50% tariff on the European Union. And this comes at the heel of him telling uh, Apple, okay, to produce iPhones back in the United States. So in one single night, he not only mentioned that he wants to impose 50% tariff on EU, hopefully with the idea that the EU will be more earnest in trying to reach an agreement with the United States, so-called lead a fire under their backside. Okay, so this is something that Trump is saying. Of course, this is definitely coming out of frustration at the progress of trade negotiation. Of his 90 days, I think very soon he will use up half of the 90 days and leaving him only 45 days or so to actually get some kind of major trade deal. Presently, he has none. Okay. Now, this is the thing that I've been talking about. The In February, if you remember, Apple actually announced that they will no longer manufacture their iPhones in China, and they want to move the production line to India instead. Okay, and this is definitely not sitting very well with the president because he wants manufacturing to move back to the United States, and he actually threatened Apple, saying that if they do not produce the iPhone back in the US, he's going to slap them with a minimum 25% tariff. And this is one news that caused Apple shares to actually unravel. And now, of the seven magnificent stocks, Apple right now is definitely among the worst performer. Okay, so we want to continue to watch this because there's a lot of frustration, and things are not moving fast enough for the president. And definitely, based on his pattern, definitely he wants things to be done fast, like yesterday, and things are not moving at all. Okay, now this is one particular development for those who trade crypto. You want to know that the US Senate has already passed this act, okay, and waiting for the House of Representatives to actually endorse it, okay. Now, this is called a Genius Act. It is basically trying to regulate and to provide a framework, a legal framework for the issuing and trading of stable coins. Now, on the surface, it does appear that this bill, one pass, is definitely very bullish for cryptocurrencies. But I think what is not mentioned, okay, is that the US is thinking of using stable coin to provide the demand for US Treasury. We all knew over the last few months, especially after the Liberation Day tariff, uh, foreign buyers of US Treasury has actually walked away, or rather decided that they want nothing to do with US assets. We have seen the Treasury has been going down, the yields has been spiking, the dollar has been tanking. So we can see that this is a reflection of two major forces. One is that there is that distrust about the viability of holding on to US assets, even though the US Treasury has been labeled as the safest uh, uh, asset class. Okay, then we can see that the dollar has been coming down, uh, due basically because President Trump insists on a lower dollar. He wants lower interest rates, and he is not getting it right now, but I think he's getting it through the lower US dollar rates. Okay, so while the dollar is coming off very sharply, I think there is still a bit of more downside potential for the dollar to come down further. And definitely that is not conducive for foreign buyers of this asset in which the dollar is declining relative to their own currency. So this particular act, okay, trying to provide a framework for stable coin to actually bolster, in my opinion, the US Treasury, because the stable coin, okay, must be packed, must be backed by US dollars or the US Treasuries. So the all US Treasury is the key word here, because the stable coin under the new regulation, if it's actually become law, will require issuers of stable coin to also buy US Treasury 100%, 1:1 backup. Okay, so meaning to say that if the stable coin this legislation actually get passed, there is the possibility of the US trying to use stable coins, okay, in lieu of the lack of foreign demand for the US Treasury, because each stablecoin issued under the new regulation must be backed 100% by US dollars or the US Treasuries. So some estimates saying that over the next few years, this demand from stablecoin alone may result in at least $3 to $4 trillion worth of US Treasury, or demand for US Treasuries. So this is big, right? So watch this space, because if this bill finally got the approval, okay, it will perhaps provide a backstop to the surging US Treasury yields, because the foreigners are not buying. Okay, in fact, given the choice, given the difficulty that the Japanese are facing, there's a very, very high possibility the Japanese may be forced to sell their holdings of US Treasury to bolster their own Japanese debt. Okay, so if that been the case, there will be a wall of selling coming, because the Japanese are definitely struggling right now. And if the Japanese debt market cradle, it will have rollover effect on all the other national debt markets. Okay, so this is something that again we want to watch, and we do not have to wait very long, because June is just around the corner, and the US need to refinance $6.2 trillion worth of maturing treasuries, with another batch coming in September. And this is only the national debt. We also have more than $1 trillion worth of corporate bonds that are due to be due for refinancing before the year end. Okay, so all in all, we are looking at massive, more than $10 trillion of uh, uh, maturing bonds that need to be refinanced, and it's paramount that they can do so at much lower yields compared to where the yield are right now. Okay, so this is something we want to watch. Of course, we all knew this time around the Trump family has actually been very active. I think they are trying to take a ride because they are the ones who's going to set the momentum, right? And President Trump has actually gotten a lot of crypto-friendly heavyweights into his administration, and he has also launched uh, a company called the World Liberation Financial. Remember his Trump meme coin? It was also part of that liberation coin. Okay, and there are speculation that if the stable coin, this bill, the Genius Act, is being finally enacted into law, it will enable the Trump family through the issuing of the World Liberation Financial stable coin called the USD1, okay, to also benefit from this act itself. Okay, so there is a bit of a conflict of interest, and that's the reason why Democrats such as Elizabeth Warren has been very vocal in opposing this bill. Okay, because never we have never seen the first family ever, okay, benefiting from a bill directly because they have a commercial product that will actually benefit from the passage of this bill. Okay, this is going to be massive. So it'll be good for crypto if it's passed, and it will be even better for the Trump family if it actually become law because by then they can issue stablecoin. And if you remember last week, the week before last, President Trump was in the Middle East and Qatar has actually committed $2 trillion to buy this stable coin that is going to be traded through Binance. So everything is all linked. Okay. Now it seems that the pay for play, which is buying influence within the US administration, is out in the open. Qatar has openly said that they will commit $2 trillion as far as this USD1 stable coin is concerned. So it's going to be massive. Okay. So that brings us to the week's performance. And if you have any question whatsoever, do remember to bring them up. Okay. So let me check if there's going to be any question. Yeah, there are two here. Tanvi is asking, among the Japanese buyer of US bills and bonds, is the Bank of Japan and the government the largest buyer of US treasuries? Yes. Not only are the Bank of Japan the biggest buyer of the JGB, which is the Japanese government bonds, they are also the biggest buyer of US treasuries. Okay. I think last I saw was the number was $1.3 trillion worth of US treasuries. Okay. So this has this will have more monumental impact if they decided to do any kind of adjustment, okay, just to backstop their own Japanese JGBs. Okay. Tanvi is also asking, could I repeat a bit about the 1 basis point resulting in so much billions in debt? Now, 1 basis point is 0.01. Okay. So, no, sorry. A 100 basis point is equal to 1%. Okay. So if the US Treasury bills goes up by 100 basis point, which is 1%, considering the current total national debt that the US hold is $36.2 trillion. That's for simplicity, let's say it's $36 trillion. 1% of $36 trillion is equal to $360 billion. Okay, so for every 1% increase in the yield of the US Treasury, the burden of servicing this $36 trillion worth of debt is going to increase by a magnitude of $360 billion for every 100 basis point increase in the yield. So it is very, very important for the yield to come down so that the US Treasury can actually roll over at a much lower rate. That is going to be hard because it is not just the American having to refinance. Everywhere, every major governments have to refinance their debt. So it comes at a very inconvenient time because the biggest buyer of US Treasury now runs the risk of having to save their own bond market, and they may actually be forced to unload US Treasuries so that they can bring the money back home to buy their own bonds. Okay, and it will also cause a unraveling of the yen carry trade. Now remember, the yen interest rate has been for a long time been negative, and it has been moved to zero. And now the pressure on the on the Japanese government is to hike interest rates because inflation right now is relatively high. So in order to tame the domestic inflation, they would have to raise interest rates. That will cause the yen carry trade, okay, to unravel big time. Nobody truly knows what is the total size of the yen carry trade, but it's massive. Okay, it's in the trillions of dollars. And if Japanese interest rate is going to rise, it will negatively impact the yen carry trade, resulting in a massive global unwinding of the trade. Okay, many people will start to buy the Japanese yen, okay, to retire their Japanese loans, okay, and that will have a ripple effect. Okay, so the following question for Tanvi is: does rise in yield also directly affect the other asset classes like equity markets? It is the spillover effect. Okay, it's a spillover. Now, if you are selling US assets like US Treasury, for example, the question is where do you park your excess liquidity? Because money manager must constantly be invested. They cannot be sitting on cash. Okay, if their money is not safe or they're not getting the desired results from the holding of US Treasuries, and by them selling, they will have to reconsider another asset class. It may not necessarily flow into equity markets because equity markets right now has a big cloud over because of the tariff policy. There's a lot of uncertainty. So as far as US equity market is concerned, the current sentiment is that they are trying not to commit to too much of US assets. That's the reason why you see uh, capital has been flowing into gold and flowing into Bitcoin. So this week itself, we saw Bitcoin trading at all-time high. Okay, it has actually briefly breached $111,000 per coin. Okay, and that's a reflection of people getting out of the so-called safe asset, the U.S. Treasury, and put them somewhere else. And the two beneficiary that has been very obviously been benefiting from this shift has been gold and Bitcoin. We will talk about it as we come to those two assets later on. Okay, with no further question, I will continue with this presentation. We can see this past week, equity markets, the chart on the left, okay, has been coming off. And they have all been easing based on the news and the factor that I have touched on earlier on. Principally, we have the Japanese equity markets that is in danger of cratering, which led to a sell-off in JGBs and is also seeing the spillover effect into the US Treasury markets. And of course, the biggest news come midweek when US actually warned that Israel is getting ready to strike Iran nuclear facility on their own. Okay, so that was the biggest movement for equity market, the single biggest driver that drove down the Wall Street in midweek. Then on Friday, just as things was stabilizing, you can see that President Trump came in with the 50% tariff on the EU and also warning Apple to bring back manufacturing back to the States. So it's a 1-2 punch on Friday. So that result in lower prices in equity markets this past week. Now, the other asset that has obviously benefited from all this change in sentiment has obviously been Bitcoin and gold. As you can see on Tuesday, gold went up by almost 1.9%, Bitcoin went up by 1.4%, and then that is followed up by another movements surge in gold by more than 2%, and Bitcoin managed to somewhat taper down to only go up by 0.5%. Okay, so we can see that things are moving not necessarily in the right direction. Okay, so in terms of economic data that has come through this past week, the one that people will be has been watching on has been the PMI, which is the Purchasing Managers Index, and this is by the S&P Global. We can see that it has actually gone up. The manufacturing have gone up from 50.2 in April to 52.3, which is good. The other thing that's also good was the services PMI from 50.8 to 52.3. Okay, and this could be a reflection of stocking of inventory. Okay, for all we know, it could be part of that uh, 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 the impact of having that agreement that we have at the beginning of this month itself, in which China and US appears to have been de-escalating. So the next 90 days in which the US and China is having the 90 days truce is likely to be the window in which the Chinese will want to export as much as possible, and the US want to import as much as possible. Okay, this is trying to build up their inventory before the year-end Christmas season. Okay, so importers are definitely looking to ramp up their imports, but it takes time. Okay, to get the goods produced and shipped across into the Atlantic. Okay, so it's going to be take some time. So that's why the Atlanta Fed president says that he will want to observe this for the next 6 months. Okay, the impact of the tariff policy on inflation. Okay, so as far as the week's performance is concerned, we can see that the Wall Street itself hit a peak last week before it closes, but this week has been basically downhill. Okay, so this past month we can see that the gains is still positive. We still have one more week to go before the month of May ends. Okay, will the month of May end up in in positive for for Wall Street? As far as the Dow is concerned, it's still up 3.7%. Okay, but on the year-over-year basis, it's back down to negative at 2.21%. In the S&P 500, which is more retail, okay, for the month is still up massively at 5%. Now, we will have to watch whether it can hang on to its 5% gain for the month. And as far as the year is concerned, it's now back into negative territory and minus 1.34% in the S&P 500. The Nasdaq has been so far the best performer. Okay, it's up 7.63 even with the slight pullback that we saw this past week. For the year, it's down less than 0.5%. So it is still by far the leading equity index for Wall Street. As far as gold is concerned, gold has actually rebounded very nicely. Remember last weekend we talked about the possibility of a temporary low in the gold prices having pulled back in a classical three-wave pattern, and it's getting ready to bounce, and it did bounce. Okay, so it was aided by first the midweek report about the possible uh, threat by Israel on Iran, and of course supported by the 50% tariff on the EU by President Trump. Okay, so this has been very positive for gold because amidst all this uncertainty, everybody is trying to rush into an asset class which can provide some kind of stability. And it seems that gold seems to be performing that role right now. Now, the question here is, will this result in gold taking out the all-time high at $3,500 in this particular run? We will have to watch, but technically, I think it has hit a wall. Okay. Later on, when we go into the gold chart, I will show you why I say what I say. Okay. Is there a possibility of another pullback in gold? Never say never. Okay. So for a time being, just know that this week has been quite positive for the gold market. Year to date, gold is up 28%. This is very, very good. Remember, the whole of 2024, gold only went up by 25.5%. So in one single quarter, okay, slightly over one quarter, we can see that by the second quarter of this year, gold has already outperformed what it did last year. It's up 28% compared to the whole of 2024, in which it was only up 25.5%. Okay. Now, crude oil has a bit of a pullback, although generally speaking, there's a possibility the low is in place, but we have to watch, okay? Because President Trump has already uttered, okay, that he wants $40 to $50 per barrel oil, okay? So the low so far as the WTI futures is concerned is $56.39. There is still the possibility of lower prices. We cannot eliminate it because we are still seeing lower highs and lower lows. So unless we have a structural change in the price movement above $65 per barrel, okay, there is still the possibility of lower prices ahead. Okay, we will have to continue to monitor this. But long term, I am very, very bullish on oil. Okay, but for a time being, the current sentiment seems to be not in favor of higher oil prices. The dollar index has pulled back very sharply from the rise that we saw over the since the second last week of April. Okay, so now 1 month later, we can see that the gains in the dollar index has basically been erased. Okay, now we are back to below 100. Okay, for the dollar index, with the possibility we may see even lower dollar index value. Honestly, I think that the possibility is very, very high. Okay. I look across all the currency pair, the major currency pair, it suggests that currencies are getting ready to resume its uptick against the dollar. So that put the dollar index in a somewhat negative phase. Okay. Now remember, tomorrow is Memorial Day, so the market will be closed, especially equity markets will be closed in the States. So do not stay up all night wondering why the market did not move. Okay, so tomorrow is US market holiday. Remember, it is their Memorial Day. Okay, all right. So we'll be talking about the various asset class now. We'll talk about the individual markets. Let me see if there's any new question. There isn't any, so let's get into it. But first, I have to change my slides. Okay. Can you please let me know if you can see my MT4? Yes, if you can see it, that'd be great. Okay. Now, again, we will start with the Dow Jones. Oh, you guys can see my chart. Okay, good. Thank you very much for the acknowledgement. Now, this is the monthly time frame. Remember last month, the market went up to a low of 36,500 and have a major bounce. This month, we do not yet have a follow through to the upside. There was a movement beyond last month high, but it seems that the momentum is somewhat reduced. Okay, this is from the monthly time frame. We don't see very strong uptick in the Dow as far as we can see. We still may be in the period of consolidation, but we will have to watch the lower time frame. This past week we have a high of 42,900, but it did not manage to close higher. In fact, it closed lower than the low of last week, which will put it in a somewhat bearish outlook because this is a bearish engulfing bar. And because this is the weekly time frame, it put a little bit of a negative spin to this trade here. Okay, so there's a possibility the movement from 45,153 could end up as a three wave, which suggests a deeper pullback in Wall Street going into June. Okay, this is what I mean. If this is going to be what it is, okay, the possibility of a deeper three-wave pullback is actually quite real. Okay, now assuming this is the movement, okay, we are looking at perhaps 34,240, okay, which is going to be 1,000 points below the low that we saw in March, assuming this is a larger degree three-way pullback. So the possibility remains, especially after this week's closing. So this week closing, the Dow is actually not very positive. So it set the stage for lower prices, in my opinion, going into the new week. Okay, so this is the daily time frame. Daily time frame suggests that the market has hit a double top. Okay, so there was a bit of a fake move. The high here, that was in March 26. The high was 42,859. So this past week on Wednesday, we have a marginal high at 42,900, marginally taking out this high here, which may have triggered a lot of buy stops and the market turn back down. So this is definitely a fake move. And if this is a fake move, lower prices is more likely than higher prices, unless something else changed in the marketplace. Moreover, we have a three-wave bounce here that hit equality, right? You can see this three-wave bounce from 36,500 all the way to the higher at 42,900. This is a three-wave move followed by a double top, and then the market comes down. So it definitely set the stage for lower prices, in my opinion. So if you are going to be trading equity market, just know that the Dow technical outlook does not favor extended run up unless something else change. Okay, so yep, it's still too early. Okay, we cannot see that very clearly, but I think the weekly time frame is quite telling. Okay, this bearish engulfing bar happening on the weekly time frame. So the Dow is not very, very positive looking. Let's take a look at the S&P 500. Now, S&P 500 on the monthly time frame is actually have a follow through buying. Okay. In fact, at one stage, actually tried to challenge the March high, not quite make it. Okay. But at least it closed on the so far positive relative to the closing price in April. So this is what we can see in the monthly time frame for the S&P 500. So on balance, the S&P 500 seems to be a lot more positive compared to the Dow. Okay. And here on the weekly time frame, you can see the weekly time frame suggests that there possibly could be a bit of a momentum behind. So the structure difference between the S&P 500 and the Dow cannot be more contrasting. Okay, here we do not have a bearish engulfing bar. We have a marginal high, very much like same as the Dow Jones on a weekly basis. But this bar in which it closes at the end of this past week did not close below the opening of last week. So it is not that bearish, okay? Although it has closed more than 75% of the rise that we saw in the week before, okay? So yeah, if you see these two bars together as a in isolation, that could also be interpreted as a negative move because the way it closes is 75% lower compared to where the market was the week before. Okay, so it is marginally bearish, okay, but it's not as bearish looking as the Dow Jones. So in the daily time frame, can we see something? We also have a three-wave rally, okay? In a three-wave rally, in this particular case, we can see that the market also hit equality, right? You see this one? Okay, it hit the 1.236 and then by a little bit. Okay, but unlike what we saw in the Dow, where there's double top. Here we do not have a double top. Okay, the market actually went way beyond the March high. This is the February high. Okay, so we're not talking about this one. We're talking about this marginal high here. The market actually have a change of structure here. Okay, but it closed back down. Okay, so it can go either way, okay, in my opinion. So not so clean cut in the S&P 500, but it's pretty clear cut in the Dow Jones, okay. Now this is the Nasdaq 100. We have very much a similar pattern like the Dow Jones as well as the S&P 500. There was a massive rebound in the Nasdaq 100 followed by follow-through buying. Okay, and this high here is unlike the S&P 500. It actually went above the March high, putting the Nasdaq 100 as the leading and most bullish indicator index for Wall Street. Okay, so on balance, the Nasdaq 100 is by far the most bullish looking. Okay, so in this weekly time frame, let's see. Weekly time frame, yes, we have a slightly marginal high for the week compared to the last week, but the way it closed, it is not bearish at all. It's only closed 50% lower than where the market trading range was for the previous week. Okay, so if I have to grade the three major equity index, the National 100 is by far the best looking in terms of the possibility of higher prices, perhaps even to challenge the all-time high at 22,254. Okay, whereas the S&P 500 can go either way. It's more like a pivot, whereas the Dow is by far the most bearish looking. Okay, so if you have to be trading equity, US equity markets, just understand the current sentiment. I also want to see if there's any further questions. Oh, looks like we have one new one. Okay, Tanvi, you're very active. Okay, thank you very much. Right. So there's no new question for equity markets. I will go into the European markets. Now, the European markets has by far the most bullish looking. Okay, this is the FTSE 100, very, very bullish. Same thing, it has the same very sharp rebound from the April low. Okay, this is the FTSE 100, which is the UK equity markets. Okay, 7,531 was the low last month. Okay, and this month so far it managed to maintain the gain. Okay, and it looks like the possibility of a breakout above 8,909.2 is actually very, very high. Okay, so the European equity market seems to be holding very, very well. Okay, so this will be something that you want to watch if you're going to be trading equity markets. Perhaps you'll be doing better in the European equity markets. Okay, so this is the weekly time frame. You can see that the market actually went down, hit a pocket of demand. Okay, this is where the demand was before the market ran up. Okay, so now the market pulls back and it was held at 7,531.7 the week before. No, this is not the week before. This is actually happening in April. So now the market has been going up, except for 1 week out of the last 7 week, in which it actually closed negative. The market here in the FTSE 100 has been gaining strength. In terms of closed on close, this is the second highest closing price for this index. Okay, the highest was obviously here, and that was in February 23rd. Okay, but this closing here is about the highest it ever closed. So that actually put the FTSE 100 in a very good position. There is no counter trend. The market is very bullish. Okay. And then on Friday, we saw the market recover very, very sharply from the low. So that may actually suggest that the momentum is very much still in place in the FTSE 100. So the likelihood of the market going even higher beyond the high that we saw so far, okay, 8,913 is actually very, very high. Now let's go into the other major equity index, which is the German index. Now this one is very, very bullish. It actually created a brand new high. Okay, for the month of May, the DAX, which is the German index, created a new all-time high at 24,163.2. This has been on the back of Germany, the biggest economy in the EU, deciding to go into deficit spending. Okay, they want to spend more on defense. Okay, because Germany has so far been the most fiscally disciplined. And under the new Chancellor Merz, it seems that he is prepared to go into deficit spending, and that would definitely create a lot of economic activity, especially for defense stocks. So we can see that the German equity markets is reacting to that change in their government policies. Okay, so it's very, very bullish. So this is a new high for this particular week itself, 24,163.2, although it closed a touch lower than a week before. Okay, but overall, we can see that the market is very, very strong. The only negative, if I can consider it negative, is that this bar, this current week bar, okay, is actually a outside bar. Okay, we have a spinning top here, followed by a new high and a close below the previous week opening price. If it had closed below the low of last week, it will be massively bearish. But this is again a sign that maybe a temporary top could be in place because this is an outside bar. Okay, so do we see something more optimistic in the daily time frame? Friday, we saw prices come off quite sharply. Okay, so it could suggest maybe a bit of a profit taking, okay, situation in the German market. Now let's take a look at the Asia markets, and by Asia, of course, I'm referring to the Nikkei 225. Now it's quite universal. For the month of April, we all saw massive rebound, and for the Nikkei itself, we have a double bottom. Although there was a bit of a fake move here, the previous low here, this was for the month of August 2024. Okay, the low was 30,400. And this past month in April, we saw another rundown marginally below this low here, and then market rebounds very sharply. So always do not put your stop at the most obvious area here. If you have been buying and then you put a stop below this 30,400, you would have been taken out last month and then only to see the market rally back up. Okay, so on a month-to-month basis, of course, we still have one more week to go before the month end, and the Nikkei is already showing signs that it may be losing momentum. Okay, and it may have a lot to do with the fact that the JGB market is currently very stressed. Okay, now on the weekly time frame, we have a bit of a rebound from this double bottom here. And last week, I did mention this, what you call it, doji here. Okay, this is a long-legged shadow doji. By itself, it suggests that market may be turning down. Okay, and then this week we have a close below uh, the, the beginning of May's uh, closing price. Okay, so this could set a stage for lower prices, in my opinion. Okay, so there is the possibility that we may have seen a temporary top. Okay, so as far as the nearby support is, this line here representing the previous resistance now will act as a support. So we want to see how price react as in trades lower into this line here, and this is based on the daily time frame. If it holds and have a bounce, have a reversal pattern here, that could signify the end of this profit taking. Okay, again we will have to watch. This could end up to be a temporary top. Okay, now in Hong Kong, let's see Hong Kong here. Hong Kong closed positively so far. Okay, so far it is still within the three-wave rebound. Okay, are we out of the woods, suggesting that are we going to see an extension of the rally that we've seen all the way back in 2022? A bit too early to say. Okay, so far the pattern has been three-wave bounce. Okay, and into equality. So the fact that we see a relatively sharp pullback, that is very technical. Okay, but so far this month we have seen prices crawl back up again in Hong Kong. So this could suggest a retest of this recent high that we saw in March. Okay, so this is the time frame. This is overall weekly is bearish. Okay, but we have a strong rebound. Now you notice this rebound is also three wave. So everything about the Hang Seng is suggesting that we probably will see a period of consolidation. Okay, this is a three-wave possibility. Yeah, here, three-wave, and then come down sharply, only to be supported by this bunch of demand here. Okay, and the prices went as deep as 19,000 before it hit a pocket of demand and then started to bounce. And this bounce was accompanied by a major reversal pattern here. So that actually, upon seeing this major reversal pattern on the weekly time frame, it actually set the stage for higher prices. So now the market is already 75% higher from where it was at 19,000. So would it set the stage for higher prices? And that will be crucial. A break and close above 24,900 will put the Hang Seng in a much firmer footing for a resumption of this, perhaps a more complicated rebound. So this is the daily time frame. Daily time frame suggests that we may be seeing a pullback rather than a continued strength, because on the daily time frame, on Wednesday we see a reversal pattern. This is a we call it a shooting star, right? So you can see this is a major key reversal pattern. However, so far the closing relative to Tuesday has been still positive. If we get a closing below Monday's opening price, okay, that will be suggesting that we're going to see lower prices, definitely. Okay, so the opening price for the week, okay, is at 23,550 thereabout. Okay, so if we get a close below this level, it will set the stage for much lower prices. Okay, we finished with equity markets. Let's take a look at whether you have any new question for me. Looks like we have one new one. Tanvi again. Okay, somewhere in early April, Hong Kong 50, which is the Hang Seng Index, they have a big gap down. What happened then? We have to go back to the chart and take a look at what happened then. Okay, this is, I suppose the big gap you're referring to is this one, right? And let's take a look at the date. The date is April the 3rd and April the 7th. So it's over a weekend. Okay, so remember at the beginning of April, okay, at the beginning of April, what was the major event? There was this tick for tack, right, between the US and China, okay, whereby the Chinese has dug in their heel and not wanting to negotiate, okay. So that actually created quite a bit of a negative sentiment, which possibly resulted in that gap, okay. So I can't remember what was the incident, but there was an obvious gap here, which has been not only filled up, the market has actually gone beyond that. Okay, but if you want to find out what was the event that caused the Hang Seng to gap down, go back to the news, Google the news on April the 3rd to April the 7th. Okay, the weekend that follows. So possibly you can refresh your memory as to what actually happens. Okay, if there's no question on equity market, let me quickly move on to currencies. We have the dollar index. Earlier on, I did mention dollar index does appear to be quite soft. Okay, assuming this is an ABC move, A being here from the top of 114.70, okay, with a bounce back to 110, I think the market is likely to come down further, especially after this week closing. Okay, now this week closing is actually quite dramatic because it closed lower than the last 4 weeks. Okay, so essentially it has erased more than 50% of its rise from 97.67 all the way to 101.8. Okay, the closing price on this platform is 98 point almost 99. Okay, so we can see prices are coming back down, and I think a move towards equality somewhere near the 94 and a half is quite likely. Okay, we want to watch this. Okay, and it is quite interesting right here. Here I see, I have a remark which I left here on my chart, saying that the week of May 19, which is this past week, okay, and a dramatic reversal, and it actually have a very dramatic reversal here. Okay, so there we have it. The dollar does appears to be heading south again. So on the daily time frame, we can see that this is a potentially five-wave move. And if this is a five-wave move, the move lower is likely to take out the most recent low here at 97.67 towards possibly 95.4. Now, on the weekly, is 94.5. Okay, so on the daily, the target is nearer by one whole point at 95.4. Okay, so at the bare minimum, if this price continue to go down below 98.66, which is very likely, then I think continual weakness into 95 and a half is the next logical target. So bearish on the dollar going forward. Let's take a look at the euro versus the dollar, which is a mirror image. Again, we do see the mirror image of a possible ABC move. Okay, if this is an ABC move, we are possibly and potentially looking at 1.19 in the euro versus the dollar. If this is just a simple three wave, and obviously here we have two major pivot high here. 490. Okay, only with a close above 125.50 would I change my opinion. Right now, the entire market here is very bearish on the euro dollar. So it does mean if this is a ABC move, very similar to what we saw in the dollar index, that means very soon, I think may not happen in the this coming week. I think somewhere in June, there's a very possibility dollar may actually bottom out, and if we also see the topping out in the major currencies like the euro versus the dollar or the sterling versus the dollar in an ABC move, that means to say that we may be getting ready for dollar strength beyond June next month. Okay, so somewhere in June, a bottom is likely to be in place for dollar, and do not sell dollar ever lower because the risk of the market bottoming out is actually very high. Okay, so as far as I'm concerned, I'll be looking for this top to re-establish short in the major currencies. So now if you have limited capital, you're going to pick the one that you want to sell. So now we know that anywhere about 120, 119 to 120 and a half is a possible area to look out for a call. So allow the market to drift higher until the appearance of a reversal pattern on the higher time frame, such as the weekly time frame or the daily time frame, then we want to consider taking up the longer term directional bias, which is sell the currencies against the dollar. Okay, so in the weekly, we can see that, yeah, this week has been very, very strong, but this strength in the dollar is part of an ABC move, okay, targeting 1.19. So watch out for 1.19. And if we do get some kind of a negative reaction, because this is very technical, right? So there could be technical profit taking as the price goes into 119. Okay, do watch out for their prices. On the daily time frame, this is a five wave, very similar to the dollar index. on the daily time frame. If this is a five-way, we are looking at potentially a move up to 119. So everything is falling around 119 and a half, 119. Okay, so watch out for this possibility of another rush up, completing this five-wave move, and then followed by a pullback at the bare minimum to challenge a 110. So if you 119, pull back to 110, that is 9,000 points. Okay, no, sorry, 900 points. 900 points is actually quite lucrative trade. So in the sterling versus the dollar, we can see that we're also seeing it's not so classical three wave. But if I have to really put a hands on a three wave potential pattern, it could be this high here versus this low here, which call for a break of this swing high, which is not ideal, okay? Because the target for equality using this potential move here is at 148.20 at the bare minimum, which is way above the 143.75 high that we see here. In order for the bearish market to remain bearish, we don't want to see new high created. In fact, all the highs are getting lower. So if we are going to be maintaining a somewhat bearish outlook, we want the next high to not exceed anywhere near 143.75. Okay, so if I have to sell, the major currency sterling does not look like a good bet. I think the euro dollar seems to be a much better bet relative to the sterling. Okay, so you can see the closing on Friday is so strong. So there is a bit of a momentum in the sterling. Okay, maybe uh, the dynamics are very different. So if I have to sell a major currency pair, uh, sterling is definitely not my candidate. Now let's take a look at the dollar versus the yen. Now the dollar yen is looking to be like a big three-wave pullback. Okay, of course, this does not represent the end of the month. We still have one more week to go. So as far as the dollar yen is concerned, we can see that this actually is suggesting lower price. And it is also very much in sync with the fundamentals. If inflation in Japan is high and the Bank of Japan is likely to hike interest rate, it will cause the yen to strengthen. And that means we're going to see a lower dollar yen rate. Okay. And if this is the case, a three-wave move will target 136 half at the minimum, and that will be either, either 136 half or anywhere between 131 to 136 half. Could be somewhere in between. Okay, and this will finish this corrective pullback. Okay, so in the weekly time frame, you can see how this week has ended not very well, and I think this week closing, a strong closing in the yen relative to the dollar has a lot to do with the Japanese bond market. Okay, so again, three-wave move targets bare minimum 136.65 to 131.40. Okay, somewhere in between. Hopefully, it can find a bottom and get ready to resume its original move, which is to the upside. Uh, let's take a look at Aussie. The Aussie seems to be also wanting to go up. Okay, last week we have a bit of a reversal going on from a low of 0.5914, and we see follow through buying this past week itself. So this month itself, you can see a relatively strong movements. Okay, this April low followed by a reversal pattern, and this is very significant. I think I did mention that put the Aussie on a very firm footing. And if I have to do a three-wave, because the dominant trend remains bearish for Aussie. That means to say that over the larger period of time, for the monthly time frame, the dollar is still very much a buy. Okay, very, very bullish. And if I have to do a three-wave, which looks like to be the case, okay, then for all we know, Aussie may be targeting 84 cents to 90 cents, okay, to the dollar. Currently, it's at 65 cents. So that leaves a lot of room for the Aussie to go higher. So the structure in the Aussie is very different from the euro and from the sterling. Okay, so the Aussie does looks technically speaking very ideal to engage it on the long side. So consider this in the bigger scheme of things. Okay, this is the weekly time frame. The overall trend is bearish, but on the weekly itself, after the major reversal that we saw, okay, uh, 7 weeks ago, it does put the Aussie on a strong footing. The way it closed this past week uh, suggests that we probably will see a new high beyond
0.6514. On the daily time frame, it does look like a breakout is going to be happening very early on this coming week. Okay, for all we know, tomorrow when the market reopens in Asia, we probably will see the Aussie dollars above, way above 65 cents. So Aussie is strong. Now, is there anything I can show you in the Kiwi dollars? Do we see something similar in the Kiwi? The Kiwi also have the same reversal pattern that we saw similar to the Aussie. Okay, it hit a new low and have a double bottom here. Okay, but here the low here did not take out the marginal low here as 0.5467. The low here is 0.5485. Okay, so it did not go below here, did not take out the stop here, and but by and large, it was a very strong reversal, putting the Kiwi very much in the same space as the Aussie for higher prices ahead. In the weekly time frame, you can see this week closing has been very, very strong. In fact, based on closing price, this is the strongest closing since the low at 0.5485. Okay, so closing to close, it is one of the strongest closing so far, suggesting that we probably will see further gain ahead. In the daily time frame, I think very similar to what we saw in the Aussie. This closing here put the Kiwi in a very good space to take out this high here at 0.6030. Okay, and the pullback has been classical three wave A, B, C. Okay, went slightly beyond the 1.236 extension to a low of 0.58545. Okay, followed by a wrong move. So basically, medium term, I would suggest, even the near term, I would think the Aussie and Kiwis are good candidates for follow through buying. Okay, is this the same thing that we saw, let's say, in the dollar versus Canadian? Okay, here the Canadian dollars look strong. Okay, relative to the dollar. Okay, so we have a major sell-off in April, and this month is so far, it also managed to see a bit of a follow-through selling. Okay, here we have triple top. Very interesting. Okay, triple top followed by a pullback, suggesting that we will see lower dollar rates. So whether you're looking at the strength of the Kiwi or the strength of the Aussie, and we look at the dollar yen rate, we look at the other major currency pairs, even the dollar Canadian, suggesting that the dollar is heading lower. Okay, this past week we can see the dollar Canadian close at the weakest we have ever seen since October last year. Okay, so it does set the stage. Now, if I have to say that how far much more it can go, there is a potential for a five-wave move here. Because it's no longer equality because of the closing that we see this past week, the possibility that this may extend even sharper lower, okay, sharply lower. By that, I mean if you can take a 0.618, that will be one target to aim. And I change this to 2. So somewhere lower, okay, the nearest, if this is going to be a potentially five wave, okay, 1, 2, and this is the most aggressive wave, it should be targeting 135 to as much as 132.60. Okay, so however you slice it, the dollar looks like it's heading south. Okay, yep. If this is a five wave, it looks like we're going to see much lower price. One in the weekly is 135. Here, if we do this same thing here, it's 135. Okay, so that will mean the market is unfolding as a potential five wave with much lower expectation. Once market hit this level, 135 to 132 half, okay, somewhere in between, we probably will see a bounce. And if we do see a bounce, the maximum potential is back to 140, followed by another dip below whatever low it creates here. Okay, so that will bring us into June. So like I say, it all falls into somewhere in June, in which I do expect some kind of stability to return in the dollar. And from that onwards, I think we probably will see dollar strength going forward in the months ahead. Okay. All right. I finished with currencies unless you guys have question for me. David is asking, with the dollar depreciating and higher yields suggesting cheap treasury bonds versus possibility of a carry trade favoring the yen, where do you think the money will flow to? The money is flowing into gold. I did mention, right? And it's flowing into Bitcoin. Because the when people unwind their holding, especially the carry trade, if they buy the yen to basically return back the yen loan. So what they do get is the dollar. So if you have dollar holding, you have to decide. If I'm an international manager, I will have to decide where to park my money. Currently, I definitely do not want to park my money in US equity markets. I may park my money in European markets because when you look at the FTSE and the DAX, it does appear to be relatively stronger. Okay, so if equity is not where you think it's going to be safe because of this uncertainty surrounding the tariff, because up to date, no major countries has a trade deal with the United States, despite the 90 days pause. And now Trump says that he's going to dictate which what rate each country had to pay in terms of tariff to the United States. So he has shifted he has shifted his stand from negotiation to dictating terms. Okay, so that will definitely be not conducive for the global economy. So equity may not be the best place to be in, and if that's been the case, the fact that this week we saw a major pivot into Bitcoin and gold suggests that money is flowing into these two asset classes. And for Bitcoin and digital assets, the possibility of the uh, House of Representatives passing through the Genius Act will create the necessary condition for a sustained rally in digital assets. Okay. And of course, we do not know what's going to happen in the Middle East, but we also read news in the last few days. I think I read it this afternoon that Germany, for the first time, has positioned troops beyond its border to Lithuania. Does it mean that the whole of Europe is getting ready for something more nasty than what we have seen so far? Now, Germany has not moved its troops beyond its border since the end of World War II. This is the very first time they have moved their troops and stationing them in another country. Okay, are they getting ready for something? We do not know. So, I think to be invested in gold and Bitcoin seems to be the current flavor of the month. Okay, so of course things can change because I do expect there's a possibility of gold continue to consolidate for another month, for at least another couple of weeks before it actually find a bottom. But by and large, I'm still very bullish on gold. Okay, so far I'm waiting for gold to actually break out, which is what I'm going to show you next. If gold actually have a technical breakout, which is very likely because right now it's right at the ceiling of that resistance. Okay, if it breaks through, technically speaking, then possibly we're going to see a rush to the all-time high. And if we see anything negative on the geopolitical scene, it will be the confirmation that we need. Okay, so for the simple answer, David, currently it seems that money is moving into Bitcoin and digital assets as well as precious metals. There's even the possibility of silver breaking up this time. Okay, so with that out of the way, let me quickly go into gold. Weekly, on a monthly time frame, you can see that so far we have a higher closing compared to April. Okay, and the market has already traced out a potentially five-wave move, meaning to say that we have not seen the top. We are right now in the midst of a very aggressive rally in gold. Okay, this is 1.618. Okay, and I do expect a bit of a pullback. We did have a bit of pullback, but not so obvious in the monthly time frame. We can see that in the daily time frame. The weekly is not even obvious. If you can see this three-wave pullback on the weekly, followed by this week's strong closing. Now, when you look at the closing price of the weekly time frame, this closing that we have at 3,357.75 is the highest closing price for gold ever. Okay, obviously we are not talking about the all-time high traded intra-month, okay, but we are talking about on a close-to-close basis, gold has closed at the highest possible ever. So on the daily time frame, this is where I want to show you. Okay, we have a classical three-wave pullback equality move into this bracket of prices, which I mentioned to you 2 weeks ago. The low was 3,120 and 90 cents. This is followed by one whole week of rally. Notice where the market touched this red line here. This is a resistance, okay? So why did the market stop here at a height of 3,365.9? It's definitely technical. So what I want to see next as confirmation, we have the bare minimum pullback. This is the simplest correction you can ever see, okay? Can it turn into something more complex? Obviously, it can, okay? But so far, it fulfills its bare minimum requirement of a technical pullback in a three-wave pattern. Now, if we have a break and a close above this red line here, at least in the daily time frame, it will set the stage for the resumption of this directional bias in the daily time frame. Meaning to say, a rush beyond 3,500, okay, is very likely if we have a close on a daily basis above this resistance line. So this could be a very potential explosive move to the upside, okay? However, if the market did not do that and it come back down again, it could end up as a more complex corrective pattern. Like I said, in terms of timing, I still believe that there is a possibility that gold will continue to correct and into somewhere in June, okay? So there is that possibility. But however, if we have a close above there on the daily time frame, I think I will have to accept that the correction is over. Okay, so this is based on the daily time frame. Now, even on the 4 hours, you can see very clear three-wave pullback inequality bounce, and this bounce is very interesting because it's unfolding in a five-wave pattern, completed five-wave. So near term, okay, it may or may not break through this resistance line, but if we have a pullback to somewhere near to retest this low here, 3,280, that could be the last call, okay, before another round of buying effectively take the market beyond the resistance line. Okay, so there is the possibility of a good trade happening in gold. Gold waiting for the breakout. Now, if silver has been underperforming gold for quite some time, okay, but it did not seriously pull back, okay. So in terms of the structure, we have a three-wave bounce. This so far, the three-wave bounce is about the only negative about silver. I would have to change this again. Silver is heading towards the equality zone. Okay, so further gain ahead must take out this $44.21. If the market go up further and hit some kind of a pocket or resistance, anywhere between $36 to $40.50, and it cannot go much higher, it may come back down again. Because so far, this pattern is very corrective looking. That's, that, that's based on the monthly time frame. However, on the lower time frame, silver does looks like it's getting ready to to continue its surge. Here we can see a three-wave pullback in the weekly time frame, hit equality, and have a strong reaction to the upside. That the way it closed on Friday, okay, does suggest that we will probably see another challenge of the high that we've seen so far, okay, and towards the last quarter of last year. $34.86 was a high, and that was traded October 2024.
Okay, so going forward, there's a possibility we may see this level being taken out because it has finished its three-wave pullback. On the daily time frame, we have a double top in place, but the closing so far on Friday does suggest that we possibly will see higher prices. A break of $34.57 will be the first clue that we possibly will see higher prices in silver going forward. If the market can effectively take out $34.57, the next barrier to watch out for will be here. Okay, $44.21. So by and large, it seems to be uh, so far, if you're trading near term, okay, prices of silver does appear to be supported. Let me see if you guys have, obviously have one more question for me. Stan is asking, do I observe platinum is moving higher recently? Obviously, I did not because the volume is actually not ideal for trading. Platinum, yeah, it has been on the move. Palladium is also on the move. But for the purpose of trading, I think the spread is a little bit wide to my liking. So I can monitor it, but I don't trade platinum or even palladium because it's just not mainstream. Okay, things may change, but for the time being, I do not. Maybe what I can do is I talk about platinum next Sunday. Okay, let's go into crude oil. Crude oil has pulled back, okay, and looks like we can see lower prices ahead. Now, a high of $126.50 thereabout was actually traded way back in 2022, okay, within the month of after Russia execute its special military operation in Ukraine. So that was a high. So if we see these movements since then, okay, especially after the drop in April to $54.76, it does suggest that this move is not over. Okay. If I have to if I have to make a guess, technically speaking, the bottom is at $35.50 to complete this three-wave pullback. Is it possible for crude oil to lose all the way to $35.50? Um, if that is the case, a lot of oil company is going to go bust, especially the shale oil companies in the States. Okay, because Saudi Arabia has a lot of capacity to absorb lower prices compared to the other oil producers. Okay, Russia effectively needs $45 per barrel to make it even commercially worthwhile for them to produce. Okay, the US is definitely way higher. Saudi only need $10 per barrel. Okay, so the cost of production is very different across all the major oil producers. And given the technical outlook here, it does look like it's possible over time to see this drift in oil prices much lower. You can see here, technically speaking, on a monthly time frame, the low here on November 2020, the low is $33.80. Will we ever go to challenge this level? I think this will be a good level to consider. If the price ever goes into this bracket, anywhere near $35, start looking for levels to buy. Okay, only when you can see confirmation in the lower time frame, uh, some kind of technical pattern that you see that can actually suggest uh, it's time to buy. Okay, so in the weekly time frame, we have a bit of a pullback. Okay, rebound. Okay, so if this is going to be the rebound near term or in the medium term, somewhere between $65 and $67 could be all you can do for a time being before it come under selling pressure again. Okay, so this is a three-wave targeting 65 to $67.40. Okay, possible, but it's not clear. Okay, so energy may not be where I want to be looking at for the time being. Okay, it's too low to sell in my opinion. Okay, but let's see what happens. So I won't be actively be watching the oil market for now. So now goes to Bitcoin. It's exciting, okay, but there's no solid follow-through buying. So the high trader is $111,940 per coin. And uh, if the market close by the end of May above 107,000,
that's considered to be one of the highest closing. And everything suggests we probably will be seeing higher Bitcoin prices, largely because the current Trump administration is so pro-crypto. Okay, they are trying to remove all the barriers. And now, especially with the Genius Act right now halfway through Congress, uh, a good result will translate into more bullish signal for Bitcoin, especially with all the major players now in this game. The last I heard was JP Morgan and the other major US banks are trying to team together to launch stablecoin of their own. So all this hype around the Stablecoin Act, okay, is definitely going to be very positive for digital assets. So possibly we'll see higher prices in Bitcoin and the other digital assets. So uh, you can see that the market has no counter trend. It is basically very, very bullish. The nearby support is within here. Can the price goes into this breakout of prices, which is anywhere near 93,000 to 98,000. Okay, if we are lucky, we see a pullback into this bracket of price because this is where the area of demand is. We have one flush here in between. This is where the demand is. Okay, the smart money will reappear here if the price ever dip into these prices. Again, that level is somewhere on the weekly time frame, anywhere between 93,000 to 98,000. On the daily time frame, you can see the same thing, right? 93 to 90, uh, narrower, 93 to 96, thereabout. So will it come to this level? Not sure. But if it ever come to this level, this is definitely an area to consider, okay, for those who have missed the boat, so-called. Right. And let's take a look at Ethereum. Ethereum is coming alive. Now, this month we see a bit of excitement in the Ethereum space here. It has been neglected while the other digital assets, the other coins has been going higher. Last month, we have a low of $1,384.66 in Ethereum. This is a classical reversal pattern followed by a very strong surge in Ethereum so far this month. Okay, so that set the stage, okay, for a somewhat complicated pattern. The overriding bias is to the upside, but the pattern since then, okay, is not clear. But at least in the near term, we can see that there is demand for Ethereum. Okay, so this is where we are. This is the weekly time frame. Very strong bull market. Okay, 3 weeks ago. So if you want to find demand for this one, it's somewhere around here. So if you are looking to buy Ethereum, if we ever see the price dip back into 1,730 to 1,870, that could be where you can see the re-emergence of buying interest. But we are not sure whether it can come back down that deep. Okay, but if it ever does, then that will be a good area to observe. Okay, to see if we can see some kind of buying interest. Now on the daily time frame, here's something that you can actually work with. We have a double top here, $2,737 against 2,732. Okay, this works out to be a potential three wave, meaning to say that near term, based on the daily time frame, there's a possibility of a re-challenge of 2,325. Anywhere between 2,333, sorry, 2,000 222 to 2,320. This 100 range, $100 range could be where buying interest may actually emerge, because it's highly unlikely that you will go down to this level. Although that will be a gift, but based on the strong rally that we see, I think realistically, I think if there's going to be a pullback, at most we see a dip marginally below 2,325. Okay, and then it will resume again because this 3 days of move actually is all the demand that you can see. Highly unlikely we see a dip back into 1,007 or even 1,870. I think the most you can expect is just a marginal low below here and then look for a buying signal. Once you go into that space, the market ever go into that area between 2,222 to 2,320, go down to the lower time frame, okay, and see if you can find something to do. The nearest bottom is $2,270.80. Okay, so if we have a three-wave move into this bracket of prices, it is just about here. Okay, so maybe quite clearly there is possibly something you can do on Ethereum if they are remaining bullish on the digital assets. Let me quickly cover Solana. Okay, Solana do not have such a strong rally yet. Okay, although this is the second month we actually see a bounce. Okay, April was actually quite clear cut. There was a bounce, and this month we see continued follow through buying. Uh, it is still not clear, okay, whether this bounce from $95 is going to extend. But so far, you managed to go to $187.40 based on the weekly time frame. The overall pattern looks like it's suggesting lower prices in the near future. Okay, but however, it may actually benefit from the sentiment spillover from Bitcoin. Okay, so far we have a bit of a reversal here. $187.40 followed by this move. So there is a possibility of lower prices in Solana going forward. Okay, nearby, I think the nearest is going to be a re-challenge of this low here, $159. So nothing much to do in Solana, in my opinion. But Ripple could be the last one I want to watch. Okay, in a daily time frame, you can see that Ripple is still very much in a consolidation. Okay, the rebound from $1.61 has been very corrective. So it is not impulsive, not like the one that we saw in Bitcoin. So it would suggest that until the passage of the Stablecoin Act, which is called Genius Act, nothing much may happen. It's likely to happen in the stablecoin space, at least in the Ripple. Right. So it will drift for a while until new sentiments comes in. Right now, we have a bit of a triple bottom here. 728. So we have a bit of a challenge here. Let me see how do I do it. Okay, right now, if I want to extend it, this is based on the 4 hours. If you're going to trade short term on the Ripple, my confirmation for this that the buyers are in the market is for a move above here, this high here. Because this is where the last low was. Okay, the market go down, briefly took out this low here and start to reverse. I need to see a closing on the 4 hours time frame above the high here at $2.3474. $2.3474. It must be a close above this level before I will turn bullish on Ripple. Right? All right, guys, I think I have finished what I want to share with you this Sunday. Oh, Stan has a new question for me. Oh, no, you don't have a new question. All right. Unless there's new question for me, I'm going to close the session for tonight. And I'll see you next Sunday. Thank you very much. Bye-bye.